I failed at day trading for 7 straight years, and believe me, I blew up account after account. And I'm not talking about these $30 prop firm challenges, but real trading accounts. So if you failed at trading, this isn't some motivational speech. This is a complete breakdown of what actually works and what you can use right now in real time. I'm Kunal Desai, and after 20 years in the trenches and helping over 7,000 traders fulfill their goals in my 60-day boot camp, I'm going to give you the complete system: psychology, market structure, entries, news tradings, and how to practice it right. Let's get to work rebuilding your trading from the ground up. Look, if you failed at day trading, welcome to the club. I'm talking to you, the person that's blown up trading accounts, who's tried every indicator and every scan under the sun, who's watched YouTube video after YouTube video thinking the next strategy could be the one that finally works. Here's my story. I started trading in the dot-com bubble. I know, I look like a young man, but I'm not. I've been doing this my whole adult life. I thought I was a genius because I was making money because everything gone up. I was 18 years old. There was no pattern day trade rule. There was none of this stuff out there, and it was the wild, wild west. If you thought COVID was crazy, the dot-com bubble was COVID on steroids. And I really felt like I was a genius. I was trading during the day in the computer labs, skipping all my classes, knowing that, man, I'm gonna be a millionaire in a year or two. Who needs school? I'm just here for the computer lab. Then reality hit. The dot-com bubble popped and I lost everything. I had grown a small account and just built on it, just out of complete luck, of course, but I started having some real gains, and then poof, all my money's gone. So I lost everything, and I rebuilt and did it again and again, but once again, I lost so many accounts. Not once, not twice, not 3 times, but it would happen on and off for years. It wasn't till I was literally 25 years old and met my mentor, Paul, that I was able to get out of that rat race, that loophole, that spin cycle of just making money, YOLOing, blowing up accounts, getting back to work, making money, doing some YOLOing, and you're just like in this endless cycle. And that we can't do. And that's what I'm gonna help you with today. But here's what I learned that nobody tells you. 95% of traders, they blow up their accounts not because they're stupid. Most people are actually pretty smart that get into this, but they blow up their accounts because they treat this as a casino and not a business. What I always tell all my students is this is no different than getting a job in the real world, like a doctor, a lawyer, an accountant, some engineer, some high stress, big money job. That's what trading is. And so you have to go on and attack it just like you were if you were going to mid school and you wanted to be a surgeon someday. But you know what? That failure that I went through was probably the best thing that could ever have happened to me, because by the time I had learned those lessons, I was still a young man. Even though I felt old in trading years, I'm still in my mid-20s with my whole life ahead of me to go out and attack my goals and live the life I always wanted to. But this failure was the best thing that ever could have happened to me because I was cocky. But now that I had failed, I was ready to learn and see what actually works. Every single trader I know, and I mean literally every single one, has failed at some point. Do they blow up their first account? Maybe not. But at some point, they are faced with that account destruction. It happens to all of us, whether you're a new trader or an experienced trader. At some point, you're faced with the Grim Reaper. The real game isn't about being right all the time. It's about having a system that makes you money over time, that you can do consistently, but also replicate it over and over. So if you failed, good. You've paid your tuition to the market. Now let me show you what nobody has taught us about the real game, the game that starts in your head. Here's the truth that nobody wants to hear. Your psychology isn't your problem. Your beliefs are. Let me destroy the 3 beliefs that are keeping you broke. Bad belief number 1, I need to be right all the time. Wrong. That's a terrible way to look at it. Look, I'm wrong most years, 40% of the time, sometimes even 50% of the time, and I've still made millions millions of dollars over my trading career and been consistent year in and year out. The market doesn't care about your ego. It cares about the risk management and the system that you have that you bring to the table every day. One of the worst things that you can do is have that ego where you think you need to have some type of 100% win rate or 80% win rate or even a 70% win ratio. My mentor, Paul, one of the best traders I've ever met, his win ratio most years is 35-40%. But what happens is when he hits these big movers, he gets big gains. And when he gets out, he's taking small losses. So as a swing trader, he may be hitting 30-40% trades. And when he's stopping out, he's taking 7 to 10% losses. And over time, those numbers play out. But the worst thing that he could do is what? Try to bat 100%. Because if you have a very high win ratio, guys, that means that you're usually selling your stocks early. When I'm day trading, if my win ratio starts to creep up too high, what that usually means is I'm scalping out of everything for 5, 10, 15 cents versus holding for the real move, which in this type of market, this type of bull market, you want to be holding for the real move. How many times are you going to sell for 10 cents and then it goes up $10? How many times are you going to sell for 5% and it goes up 50% that day? Bad belief number 2. A lot of people think more indicators equals better results. Guys, I used to have like 45 indicators on my charts, man. I was into all the stuff, the MACD, the Fibonacci's, moving averages, you name it. I was piling it on my chart, man. It looked like I was some autistic artist doing Rorschach tests. Like you would just see this just nasty collage of stuff on my charts, all right? It was like I got on Thinkorswim and I just was like, this all looks good, man. Let's make a medley. This is a jambalaya of charts and indicators. And guess what? I could barely see the candles and it never made me money. If anything, it just made me more confused all the time. And I hated that because I was getting paralysis by analysis when I would look at these names. Most of the time, I could never even pull the trigger because one indicator said buy, the other one would say sell, and I would just be sitting there in trend confusion and indicator hell. The best traders I've ever seen use simple setups, use a few indicators that confirm price. So what I do is I look at price patterns, then I overlay volume, then I use a 9 EMA, a 20 EMA, and a VWAP on my intraday charts, and that's it. Like just something really, really simple. But even something like that gives me a huge edge and allows me to see the pattern still very clearly. In the end, the best traders are just trend traders, right? And our job is to find stocks that are trending and hop on them. And so use a few things, but then get out the rest of it. Bad belief number 3, I can get rich quick. Look, we all get into trading for one thing most of the time, right? It's to make lots of money and buy cool stuff and probably get some women. Right? But in the end, if you go in with that mentality, and that's what I did, you're going to be vastly disappointed. Because the thing is, if you don't love this, if you don't gain an appreciation for the process of trading, when you get knocked down to the ground, when you get kicked in the balls and stomped on your face, you're not going to be able to get up over and over unless you actually have some appreciation for the trading game and a respect for the process. If you're looking to just make quick money, do some crypto scams or be a dentist, right? That's big money right there. I got a cousin, he don't know shit. He's a dentist, he makes millions, right? You want to do something, go do some of that stuff. This is the cancer that's killing young traders, right? The Instagramming and the YouTube. You see some 22-year-old with a rented Lambo and you're thinking, wow, that guy made it, right? You see some kid posting screenshots. Guess what, guys? With Google Gemini and ChatGPT, dude, you can post your screenshot for 22 cents and tell it you want it to look like $2.2 million and it'll lay it right up there. Screenshots don't mean nothing, right? It's all about the process. Does somebody actually have knowledge to impart on you? Some wisdom that you can take with you? Here's what I tell all my students. Trading's not about being smart. It's about being disciplined. It's about getting your fingers to do what your brain knows you need to do. I've seen literally PhDs blow up their accounts because they didn't have the discipline to actually act upon what's going on in their heads. They always were about their ego. On the other side of things, I've seen just blue collar people that are my best students, guys that are just out there grinding, but they got crazy discipline. And so they're able to actually take what they learn and build upon it because they're not trading about ego. They're just trying to make money and respect the process. The grinding it out mentality, it's not sexy, but it works. That day in and day out of just getting a little bit better every single day and doing and respecting the boring work, that's what's gonna get you where you need to go. Now look, once you get your head right, you need a system. And that system starts with seeing the markets the way professionals do. I'm gonna show you exactly how to trade these type of tickers and show you how my system really works. But first you need to understand the foundation. Think of multi-time frame analysis like Google Maps. You need the satellite to see where you're going. And then you zoom down into the street view to see exactly where to turn. Here's my system and exactly what I teach in my 60-day bootcamp. I always start off with a top-down approach, meaning I look for larger term trends on a big picture basis. So stocks that have big, juicy daily charts that are trending, like Oklo a couple months ago, IONQ, RGTI. So first things first is I look at everything from a bird's eye view. We call this a top-down approach. I'm looking for big, juicy daily charts. Stocks that have just started to trend that are fresh within their trend. Think about like SanDisk a few months ago, or Oklo when it broke out of its huge base, or RGTI when it finally came out of that year-long consolidation. Then what I want to be doing is after I have a thesis of something that should be happening on the big picture, then I start to zoom in on smaller term time frames to pinpoint my exact entries and exits so that I can actually ride these trends and sashay in and out of them while I'm trading. This is the most powerful way to look at trading. You've got to be able to analyze things on multiple time frames. If I'm a swing trader, then what I'm doing is looking at weekly charts to get bigger picture trends. Then I'm looking at my daily charts to really pinpoint the exact patterns on where and how I want to enter them. And then I might use something like an hourly chart to manage my risk. When I'm day trading, I'm doing all of that on a smaller term time frame. I'm looking at the daily charts for my idea generation, my big picture thesis. And then what I'm doing is using a 5-minute chart to just pinpoint my entries and exits. And then I usually will have a more midterm chart, like a 30 or 60-minute chart to really help me hone in on the right spots to go before I even get into the 5-minute chart. Single time frame trading almost always fails. It's like you're trying to drive across the country without any street signs. You need to have a thesis behind your trades before you can actually figure out how to trade it. You need to know what and why to trade before you get into the how and where to trade. Now, let me show you how this works in real life. This is a stock that I've been hammering for the last handful of months, Circle. This is where multi-time frame analysis really comes in handy. So when I'm doing a longer term trade, like a swing trade, for me, swing trade could be anywhere from say 5 days to a handful of weeks. I always want to start on a big picture on a weekly chart, and I want to see if I'm trading with the trend. So as you can see here on Circle, you're in an epic downtrend here, and usually I'll have a shaded area between the 9 and 20 to tell me what the trend is. If that shaded area is green, then the trend is higher. If the shaded area is red, then the trend is lower. So fairly simple. So I start on the weekly and I look to make sure that the trend is on my side. So like on this particular name, you can see the trend is lower. You've had a nasty little dump off here in the last handful of days. Now, what I want to do once I've identified something that I want to be shorting, for example in this, then I will go into a daily chart and I will start to identify some key levels that I want to trade around. So for Circle, you can see here, you've got just a beautiful line in the sand coming in right through this area. And this is, guys, this is just classic technical analysis 101, right? You have a level here, let's call this 110 to 111. right? We know on the weekly chart, the trend is down. Now on the daily chart, what do you notice about the trending indicator? It's been red here for the last couple months, right? It did have like a brief moment where it's been green, but otherwise, and then we had some indecision. When it's indecision where they're just crisscrossing around back and forth from each other, I don't want to do anything. What I want to do is when it starts to open up in one direction or another, now I want to come in and take a particular trade. So now that I know that the trend is lower, now I have a level marked out where I can say like, okay, if you get below this level, now I want to be taking some entries to the short side. And then finally, once that is done, I will go to an hourly chart. And just pinpoint my exact entries and exits. And so I know that this zone is where I want to be shorting. And then what I'm doing is looking for some type of trading pattern to get in. So for me, like this is just such a simple one, right? You have a trend and then you pop through and you just get yourself right? Like a little bit of a bear flag here. That is like a classic, just like happy-go-lucky swing trade entry, right? So you're going weekly, then, right, you're looking on this hourly chart for some level of consolidation. And what you want to be doing is I want to see it under these EMAs. And now I can come in for an entry and play this thing, back down into the downside. So that's like your classic kind of swing trade way of looking at things. Weekly, then daily, then using hourly to pinpoint your entries and then also manage your risk, right? So you want to put your risk right over this level over here. And now you can kind of trade this thing back to the downside. Now, once I'm in a stock for a swing trade, I will still in my day trading account, if it starts to trend down, keep hammering this thing short for day trades using any one of my day trade patterns that we teach, ORB, quick pullback buy, whatever it might be. But this is where you really want to go in if you're looking to align stocks on multiple time frames. But here's the key. This wasn't luck. This was a systematic analysis across multiple time frames. And it's the same process I use every day. So I caught a big chunk of this on the swing trade, but even in my chat room today, we were day trading this to the downside because once I identify something that is going to be hurting, I'm going to be hammering it from multiple angles using time frame analysis. When all time frames align, that's when you really want to press the gas pedal because you can go shorter and shorter. For example, when I'm day trading something like this, now I can go in on a 5-minute chart and really hone this thing down also. So you can see here, like on a 5-minute chart, we entered this thing on the opening range breakdown around $80 and some change, and you're able to also extract some extra income on your trades by mixing and matching it. The key though is don't shit where you eat. I wouldn't recommend day trading and swing trading in the same account. It messes with your head. You tend to turn all your day trades into swing trades and your swing trades into day trades, and it's just a big cluster of confusion. You feel like a 13-year-old boy again. So I try not to do that because I'll just crisscross everything around. Now that you understand the big picture, let me show you 4 ways you can start executing it. Here's where most traders screw up. They learn 47 different entry methods, 1 minute, 2 minute, different patterns. They're all over the place. You only need a few to successfully figure out how to enter it. Because the big thing is you want to keep it simple. Our job is to hop on trends as they emerge, whether it's to the upside or to the downside. And to do that, you only need really a handful of entry and execution methods to ride on that thesis of whether you're hopping in a trend to the upside or downside. So I'm going to give you a couple proven methods that you can use right now to enter and exit these type of names on a day trading basis so that you can capture trends anytime you want, whether you see them to the upside or downside. And guys, make sure you just pick 1 or 2 and master it. That is the key to trading. Don't be the jack of all trades where it's like you kind of know a little bit about all this random stuff. Become the master of 1 or 2 things because that's going to allow you to at least keep paying your bills. And then you can kind of build upon that and really develop some expertise in some other random things. But first, you got to learn 1 or 2 things so that you can pay the bills and build up your bankroll. And then from there, everything else is gravy. So let's talk about entry method 1, opening range breakout, which is a commonly used trading method by professional traders since the beginning of time. I've added a couple nuances to it to increase the win ratios, but otherwise it's pretty straightforward. So let's dig in. Why do I like this setup? Well, number one, it's very simple, but the second part is it gets you into trades early in the move, first thing in the morning, which is when my preference is to actually make my trades. One of the main things that I like about it is that it's mechanical. When you see it, you know it, and you know exactly where to put your stop loss and how to actually manage the trades. It's got time. It's got very strict rules to it. If you see it, you do it. If you don't, you leave it alone. And I like that type of simplicity, especially in the morning when everything is moving fast. So here's how it works. So first, you want to use multi-time frame analysis by looking at your daily charts to figure out what you should be trading. Remember, your daily charts when you're a day trader will give you your big picture analysis. So if you look at this ETHC, this is an Ethereum crypto treasury play that is in a big downtrend because Ethereum itself has been dumping. So if you look at this daily chart, I see something like this, and it looks like just like a big giant bear flag here, right? You got multiple attempts to break through this 15. If you lose the 15, it's going to be lights out on it. And then if you're looking at, say, like an hourly chart, right? What you can see here is about 1501 is a big sweet spot. Eyeball some levels. Now what I want to be doing is looking at my 5-minute chart to look for an opening range breakdown. Now look, on the upside is an opening range breakout, but since the market's taken a big giant blumpkin lately, I want to focus in the shorts just so you get it into your head. I think in 2026, there's going to be some nasty McGee's out there. So how do you trade the opening range breakdown? Right? You need minimum 3 sideways candles to go. So what you're looking for is a shred down and then minimum 3 sideways candles. Then when you break the range, you're going to short it and you put your stop over the VWAP and you're good to go. So for ETHC, we've already identified that 15 is a huge spot. So now anything under 15, we can short using the opening range breakdown. So you get a candle down and you shred off at the open. So this is your opening candle. So you got one candle, the second candle, and then the third candle you break down here. So you're gonna short this and you're gonna put a stop loss right over the VWAP. So you've got, 50 cents risk on something like that. And now you can play this thing to the shred. And remember what I said, what you wanna do is scalp out of some of it when you get 2-to-1, 3-to-1 reward to risk, and then use your 9 EMA and ride down the rest of it. Now look, what happens is as the day progresses into more of a midday or end of day, you'll have different entry points to get in. So you can pop it into the EMAs or do bear flag and have a multitude of other setups you can do. But the opening range breakdown is meant for the open, right? So you take half off, then use your EMAs and you're good to go. Now let's talk about a second entry method that I think you guys are gonna really like, because if you don't get the breakdown, or if you're just one of those people that don't wanna be chasing stocks down, you can use the quick pullback short and get an entry that's into the pop. Now the mechanics of it are the same as the opening range breakdown, and oftentimes the stock that does the quick pullback buy will still do an opening range breakdown, but what this allows you to do is have a multitude of different ways to attack an entry based on an overall thesis. So remember, multi-time frame analysis. So you have a big breakdown that's coming in here on BMNR, and so you have a couple things to look at. Number one, the trend is down, right? Look at your shaded area. If it's red, it means that the trend is down. Then what you want to be doing is identifying on different time frames, right? The breakdowns here. So you can see here, you have basically a bear flag running around at 36. So anything under 36, you can start doing your opening range setups too. So very simple and easy entry, right? When you get a quick pullback short, what you're often going to have is a spike down at the open, and you want to be shorting these pops into the EMA. So see, you got this shaded area here, the 9 and 20 EMA. When you wick into these are where you're actually going to be taking your potential shorts and then scalping out of them. What you want to be doing is if you take the original short, you're going to put your stop loss here. And now what you want to be doing is managing the entry. If you're going to be shorting somewhere into this zone, right, you're going to have 25-cent risk. So at 75 cents to $1, you want to take off half your profits and then use your EMAs to gather as much out of it as you can. This is a simple way to get into trades without having to chase. If you're like me, when I was a new trader, I was a degenerate chaser. Like I invented chasing, it would seem like on some days. And so the quick pullback short really helped me identify ways to get into stocks without chasing, because chasing brings a lot of bad tendencies out at me. So sometimes, you know, when I was new, like the opening range breakouts and breakdowns would get me in too much trouble. So the pullback works a lot better for certain types of people. Now, remember what I said, you can get into these pullbacks and sometimes it'll just lead into the opening range breakdown anyway. So you have these three potential entries that you can take, or you can actually just short on the opening range breakdown and you'll have, of course, a little bit of a lower price, but you'll have a speedier entry. So either one of those will work for the open. Don't be so dogmatic about it. Whichever one looks the cleanest, I'm willing to take. In this particular case, the stock did both, but that's not always the case. So be flexible and just make sure you get really, really good entries. On the quick pullbacks, you want to put your stop loss over the EMAs. On the opening range breakdown, what you want to be doing is using your VWAP and using your stop loss over there. So you'll have a slightly different methodology for how you're managing your risk, but in essence, it's very, very similar. Now look, as the day progresses and you move past your opening range patterns, then you want to incorporate VWAP bounces or VWAP fades into your toolbox for how you would handle a stock. So once again, you always start with the big picture, figure out what you should do and your overall thesis behind it. Then you move to the smaller term pictures, right? So when you get into that kind of 11 o'clock, 12 o'clock, 1 o'clock zone of the markets, now you can be doing VWAP plays to capture your gains, right? So once the opening range patterns are done, so you can see like the stock gaps down, pops into the EMA, so you have your quick pullback short. Now what happens is as you get towards lunch, you want to be shorting into the VWAP. So you'll often get these shreds down and then a bounce right back into the VWAP. When you get a red candle that holds at the VWAP, that's your entry point with they stop right above that candle in the VWAP area. You don't got to get it too much room. And now you're into it for your afternoon kind of fade. So the open is the quick ones. And then later in the day, you can do VWAPs, and that's going to give you a little bit different type of shred. As the market slows down in the midday, you need deeper and deeper retracements. Remember, at the open, you can have shallow retracements. As the day progresses, you need deeper retracements. Now, here's the critical part. You don't need to learn every single setup all at once. Pick one of these that makes sense to you and then literally practice it for 100 trades, whether it's on the simulator or just a market replay function or some type of backtesting functionality that you have on, say, a TradeZilla. Get your reps in, do it 100 times and see if that setup speaks to you. If it does, then gain some expertise on it and then move on to the next one. And I think that's gonna go a long way versus just kind of spraying it all over the place and trying to be good at everything. Remember, you're not trying to catch every move in the market. You're trying to catch moves that fit your system, but also the patterns that you trade well personally. Now look, these setups work fantastic, but they work even better if you have a catalyst. So if you can marry these setups and then you marry it to a catalyst, like it has some news out or it has some type of sector theme. Like if you notice, I was doing a lot of Ethereum related stuff today, Circle, ETHZ. This is because, right, cryptocurrency has been taking a huge dump lately. And so I want to be shorting and playing stocks that are related to Bitcoin, that are related to Ethereum, because that's the catalyst that makes the stocks go down. When you have a fundamental catalyst and you marry it with what you know about charts and that technical analysis, that's the holy grail of trading. that's when you're really going to supercharge your results. So the big question, of course, is, well, how do I find catalysts? So look, I use TC2000 primarily as my hub for everything. You can use TradingView and use all this other kind of stuff, but TC2000 kind of is like the best of all worlds for what we're trying to do. So I run a scan in the mornings in the pre-market for gappers, and then I hook the news feed to it right from TC2000, so I can see what the gap is, I can see what the daily chart is, and then from there I can see what the news is. So like something like this PAX, right? You have a gap up on this stock because it's got a piece of news out, and that's a stock that you want to be trading, because look, you can draw the squiggly lines you want on the charts and do Nvidia and Tesla and all that stuff, but those are only going to move like 1 or 2% most of the time. If you want to take trades that give you bigger chunks, like you're trying to grow your account, you want a 5% gain or 10% gain or 20% gainer, then you need to trade stocks with catalyst. So you'll see something like this that has like some piece of news out, and then you're going to be trading the patterns on it. So TC2000 has this already built in. You can see here, I got a pre-market tab, I add a filter for volume, and then I cross-reference the daily charts so that I have a watch list of stocks that have these pieces of news out. Beyond that, you can always use tools like Earnings Whisper. You can use Benzinga. I also have an account at Trade Exchange because it's like $25, $30 a month. So you can supplement TC2000 or your charting platform with some type of news feed, but don't go so bonkers with it. Like you don't need to spend hundreds of dollars a month on tools. Just one charting platform, one news feed. I think you're in a pretty good shape. You can get your whole tech stack for less than $100. Now look, once you've got all this system down, you want to practice like a pro. Most traders, they just use the sim, but they use it completely wrong. They treat it like a video game versus the practice for the real thing. When you simulate, you want to simulate exactly how much money you would be having in a trading account. You want to be simulating exactly how many shares you would be trading in real life. I see so many of my students come in and they're like whipping around like the $1 million in the Thinkorswim a paper trader, and it's like, yeah, I made like 82 grand today. And it's like, guys, that's not feasible, right? You don't have $1 million. You don't even have $10,000, right? Let's have some realistic practice that's focused and intentional, and that's going to help you when you go live. There's such a thing as simulating wrong. Just because you're getting reps doesn't mean it's good reps. So the question becomes, how long should you sim trade? Look, you need to hit some certain metrics so that you know when you get off the sim and you go live, you're actually ready for prime time. I always ask my students a couple questions. Number one, from your sim trading, do you have one setup that you can rely on day in and day out? Up market, down market, or sideways market? An old faithful that allows you to go out and make money every day. If you do, you're 75% of the way. Now what we need to do is track the metrics on those particular names, because that's what I'm interested in, right? Win ratio, reward to risk, better. What's your average gain versus your average loss? If your average gain is $200, but your average loss is $1,000, then we've got more work to do. So I think that's going to be one of the key ones that you got to do. So you need an old faithful. You want to track your average gains versus your average loss. If they're even, you're getting there, right? Like a lot of times you're going to have bigger losers than winners. Like it's just like, we're not saints here. Like, like your average winner is not going to be $1,000 and your average loser $50, right? I wish it was. But if you can even have them close to even, you're getting in the game and you're probably going to do pretty well if your win ratio is above 50%. Once you have all of that, now it's time to move to the live trading account. You can use, of course, just a broker like Webull or Schwab, or get a prop firm account. They have them even for equities now. So you've got a few different options to go about this type of stuff. Look, I've given you the system, the psychology, the market structure, and the entries and the edges that you need to go out and make some things happen tomorrow. But look, having a map is not the same thing as having a guide. Here's the reality. You can have the best system in the world, but if you don't have the discipline to follow it, you'll still fail. You can have the best system in the world, but if you don't have the discipline to follow it, you'll still fail. And building that discipline is hard to do alone. I work with a small group of serious traders who are ready and willing to put in the work. No get-rich-quick guys, no excuse makers, no Nancy-pamsies. I'm talking about people that are ready to put pen to paper and pound that stone. We trade live every single day together. Every trade gets reviewed, archived, and graded. Every mistake gets corrected. Every win gets analyzed so you can repeat it. If you're serious about finally making this work, and I mean you're serious about changing your ways, book a call with my team. The link is in the description below. We'll see if you're ready to join the 1 or 2% who actually make money in trading. But I'm warning you, this isn't for everyone. My bootcamp courses are real work. It's a university-style system where you can't just be a wallflower. You've got to interact not just with me, but the other students, and we do serious work every day. So be prepared or go home.